Can the video game stocks keep working now that we've annualized the pandemic and they're up against much tougher comparisons? Maybe they can. We know this industry's been on fire ever since COVID sent us into lockdown, but that's part of a longer-term secular trend toward more immersive entertainment. Games aren't going anywhere as the world goes back to normal. In fact, the last time Netflix reported, CEO Reed Hastings made it clear that he wasn't worried about competition from other streaming services. He considers the gaming companies his biggest rivals. Now we're even hearing chatter that Netflix wants to launch its own gaming service. More importantly, these companies keep reporting great numbers. Last week, it was Cramer fave Take-Two Interactive. The week before, it was Cramer fave Roblox, which we pounded the table on just last night. It doesn't hurt that other than Roblox, these stocks have all pulled back from their highs earlier this year. Plus, later this week, we get E3. That's a conference. It's like a festival of all things gaming. Could be a good catalyst, depending on what gets announced. So how much more upside could we be looking at? That's more of a quantitative question. So to get an answer, we got to go unemotionally off the charts, with the help of Bob Lang, the founder of ExplosiveOptions.net, as well as being the brilliant technician and the all-star duo behind TheStreet.com's Trifecta Stocks newsletter. He's also the author of Know Your Options. So let's start with Roblox, because their platform is the hottest thing in the industry. Now remember, Roblox has a whole ecosystem that lets amateurs and professional developers make their own games and then share them with tens of millions of people. Yes, free content for Roblox. It seems like every kid is using Roblox unless they're playing Fortnite. Like I told you last night, I'm a huge believer in the fundamentals, in part because this is arguably the only safe place for children on the internet. But what about the stock, though? Check out the daily chart. After moving sideways for a couple months in the wake of its March IPO, Roblox caught fire when it reported the week before last, and it's been trending higher ever since. Lang points out that if it keeps gaining buyers on every dip, it's going to keep going higher, and that's just what it did. Look, the stock's making a pattern of higher lows and higher highs. That's exactly what technicians love to see. You should always be looking for that. It means you've got a healthy uptrend. Look at this. I mean, this is just fantastic. Here to here, that's what you want. When you look at the RSI, Relative Strength Index, which is down here at the bottom, it's an important momentum indicator. Lang notes that the trend is very strong, but the stock's not yet in overbought territory. Good. In other words, it hasn't come up too far too fast. Currently, Roblox is trading at $89. Look, Lang thinks this thing could be smooth sailing to 100 and then 120 by the end of the year. It's easily his favorite name in the group. I agree with him. In a market that generally has little patience for these fast-growing tech companies with no earnings, Roblox has managed to rocket higher. That tells you everything you need to know. Just imagine how well it can do if the turbocharged growth cohort actually gets its groove back.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.